In October 1929, while the stock market was collapsing and people were losing everything they had, one legendary company's stock didn't just survive, it went up a staggering 580%. A financial crisis is not the destruction of wealth. What actually happens is a silent, massive transfer of wealth. The money simply moves from people who are positioned wrong to the select few who are positioned right. Asset number 1, gold mining stocks. During the Great Depression, when the Dow Jones lost 73% of its value, homestake mining gained 474%. Their costs deflated, but their gold price stayed fixed. This is called operational leverage. Today, you can access this exact same hedge through the VANK ETF, ticker GDX. Asset number 2, long-term treasury bonds. The ultimate flight to quality, when the entire banking system starts to fracture. During the 2008 financial crisis, while stocks lost 57%, long-term government bonds returned over 14%. But remember, bonds are a deflation hedge. In an inflationary crisis like 2022, they will fail and drop over 30%. Asset number 3, farmland. A historically indestructible asset class that Bill Gates has been quietly buying for decades. Farmland is physically limited, food demand is infinite, and it pays you a steady 3 to 5% in annual rental income. And you don't need millions. Farmland REITs like Gladstone Land, ticker LAND, let you own real cropland for under $20. Asset number 4, managed futures. Systematic, computer-driven algorithms designed to follow major market trends. In 2022, when both stocks and bonds crashed simultaneously, these trend-following systems generated a massive 27% return. This is called crisis alpha. It protects your capital whether the world is experiencing hyperinflation or total deflation. Right now in 2026, the economic picture is highly complex. Recession odds are hovering around 35%. Global tariffs have jumped from 2% to nearly 12%, pushing massive inflation directly back to consumers. At the same time, consumer credit card debt has hit record levels, and corporate defaults are starting to tick upward. In global finance, the time to buy insurance is before the storm hits, not while you are standing in the middle of the rain. Professional institutions allocate 10 to 20% of their portfolios across these defensive categories to survive. Look at your own portfolio today. What percentage of your money actually goes up when the rest of the world falls apart? If your answer is 0, you are waiting for the crisis to start before you run for the emergency exits. But by the time the crisis is on the front page, the prices have already spiked. The opportunity is gone.
The smart money doesn't wait for the panic. They position their assets months or years in advance.
By owning a mix of gold miners, bonds, farmland, and trend-following systems, you build a bulletproof shield. When the crash comes, you aren't panic selling. You are compounding your wealth from a much higher base. If you want to protect your wealth and understand global financial history simply, subscribe to Blackboard Billionaires.